Yo, what's up, guys? RJ, Steady Trades. Another video. This time going over how I use the 8 and 20 EMA in my trades and how they allow me to stay in trades a little bit longer. And some insight on how I like to keep using them for my strategy and stuff, or how I learned to trade, which was by our founder, Steady Lit himself. So if you're familiar with Steady Trades at all, if you've taken a taken a class with us or a course with us, you understand that we like to trade consolidation breakouts, right? Which is solely based on support and resistance and price and stuff like that. We don't really need to use indicators a whole lot. However, indicators are a big part of what we do. They're a big part of what we provide. So why not use them, especially if they can definitely help and provide extra context and extra support while you're in a trade, right? Kind of help you keep the emotions at ease. We all know trading is difficult. We all know the most difficult part of trading is essentially the emotional attachment to money, right? We don't want to lose money. And so indicators can help us, stay in trades a little bit longer. And that's ultimately what we're after. I think one of the most common reasons why people lose money is because they take profit too quickly, right? Let me show you guys a way where you can enter a trade and hold on to that position for longer than you ordinarily would, or at least your runners, right? So a very popular trading strategy is an 820 EMA crossover, and we can see that take place right here. I think 921, 1348, 50, and 100. There's just a slew of EMA crossovers that are extremely popular to trade. The one that I like, I don't trade solely based off of an EMA cross. However, I know that when a cross presents itself right here, the likelihood that we continue in that direction is pretty significant. We can see the 8 EMA is my blue line, the gold line is my 20 EMA, and then this white line down here is my 200 EMA, right? So with all of these things on my chart, right, I have a 200 moving average, which we're trading above, which typically means that we should be in a bullish uptrend. We also have an 820 EMA cross right here. The 8 EMA is crossing underneath the 20 EMA and moving up, right? Now, granted, it does happen from one day to the next. We do gap up. It does cause the EMA cross. However, if you look at what happens after the EMA cross, when the market opens, we chop around, we come down, we test the 20 EMA repeatedly before breaking out and continuing up, right? So let's say that you took a trade based on all of this information that I just provided for you, right? So we're above the 200 EMA. We have an EMA cross down here. We begin to consolidate. We're rejecting the 20 EMA repeatedly, and then we break out. And let's say that we take this trade long about on that retest of the 8 EMA there. And our target is just simply the high of day yesterday, which is here. We would exit most of our position at this point, which is a pretty significant gain already, right? It's a $2 move, which is a phenomenal gain on SPY. But let's say that we wanted to maximize the trade, right? Let's say that we wanted to see if we could get more out of this trade. We can use the 8 EMA to guide us. And so if you notice, after we take profit, we get another push up and then a return to the 8 EMA, another push up and a return to the 8 EMA, and then another push up, right? The overall thesis behind how to use the 8 EMA would just simply be you won't sell your position or you won't sell your runner until you break beneath that 8 or 20 EMA. Now, granted, this trade in particular ran the entire length of the day. The next day we gap down beneath it and then right back above it, and then we're back off running again, right? And then you wouldn't exit this trade with your runners until you broke beneath it and stuff. It's a very, very powerful way to keep you in a trade. It's how I trade. I love taking profits at my targets, right? I like to set my targets based on support and resistance and stuff like that. But I also like to hold some runners, and the 820 EMA, just from my own experience and how I like to trade and over hundreds and hundreds and hundreds of trades, it's proven to instill a ton of confidence in my own ability, and it keeps me in trades very long. So I love it. I'll flip through some random tickers here that I have on the watch list. So we'll go to Microsoft, see if we can see the same thing. And here we go. So We get a cross down here. We're jumping all around the 20. We're bouncing. We do break here, but we reclaim it immediately, and then it rides the 8 EMA. Right here, we consolidate, we break out. We're riding the 8 EMA all the way up. So you can see on choppy days, nothing works really well, obviously, but you can see for the most part when we hit, let me remove some drawings here. When we break and we're forming a trend, right, a new trend, so we have an uptrend here. When we form a new trend, you can notice that the stock will just ride the 8 EMA, and you don't have really an exit until about down here. So if you entered puts, you know, on the break of these lows or something, or, you know, for whatever reason you got short at open, I mean, you're not taking, let's just say you got short here, we're holding the 8 EMA, and you didn't exit the trade until you broke the 20 and held it, which essentially would be right here is where you kind of broke above and held it. It's just so close, I probably wouldn't have sold there. More likely up here where we're actually trading above it. So let's just say, we'll just say for the sake of the video, you sold here. That's still a $4 move down, right? So that's how I like to use it. It just provides some reassurance for me in my trading. It's not a holy grail. It doesn't work every single time. I don't think anything in the stock market does. If it did, you wouldn't be listening to this video right now, right? So, I mean, just add it. You know, start to watch it. Add it to your chart, 820, 921, whatever you prefer. I prefer the 820. Most of us here at Steady Trades prefer the 820 EMA. So just add it to your chart. Watch it. See how it moves. Watch how it organically will bounce off the EMA and ride it on down. And see if you can lock in enough profit to hold the runner and really see some trades through, right? Practice with it, paper trade it, put it in replay mode, and, you know, get better with it. I promise you it works. It works really well. If you have any questions, always reach out to us. We're here to help. We're developing fearless, confident options traders. Thank you, guys.